Okay, recording this video. It's Saturday, 14th February 2015, and it's Valentine's Day. A little bit of blustery weather here in Hawaii. It's nice and warm, but all this kind of wind has blown out the surf. So thought I'd do a little bit of video, a little recap on Friday's trade, because Friday was really interesting for two kind of psychology-driven patterns. We had a busted out kind of triple top. I'm calling it the mythical triple top, and then we had a nice little feel-good ramp at the end of the day into a long weekend. So I just want to talk about the psychology then of Friday's trade. Thursday we had a nice little strong day, kind of ended up on the highs, and I always say after a strong day like that, expect some follow through the next day. Follow through happens because a lot of people looking at their charts, looking at the market at the end of the day, they've got regular day jobs. They tend to be kind of momentum players, and they see a strong day and they think, ooh, better jump in, better buy stuff the next morning. And so we always get a little bit of buying activity kind of first thing after a strong day like that. And so I say wait till the exhaustion patterns happen during the full liquidity of the day. So when all the professionals have taken advantage, if you like, of that activity. So here's the close on Thursday and the open on Friday, and there's this little momentum burst that we get kind of first thing. We do get a little exhaustion sell kind of there. Someone's anxious to kind of take profits at that point, but wait until we get that exhaustion buy and the bearish divergence comes in before taking any kind of reversal trade. It was a nice little reversal trade, but ended up with exhaustion sell, and we bounced from there to the end of the day. So first of all, let's talk about this mythical triple top. High is made first thing, and we come back and revisit that high. We revisit that high at the exact same price point. The high of this bar is exactly the same as the high of these little bars here. So that's an exact double top. Totally legitimate pattern there, an exact double top, and we can definitely get reversals from there. But it's an exhaustion buy at that point. We've not seen the bearish divergence come in order to show less buying happening from which we'll reverse. Also pull back to dirty end of trend. When we get the exhaustion pattern on the end of trend, I would say wait for the second cyclical turn after that before doing anything. So just give it a little bit of time to work out that kind of bearish divergence. It's a dirty end of trend, which means the pullback level was violated down here. We kind of went below that support, and therefore it doesn't print an end of trend, but that's what I call a dirty end of trend signal. So got everything kind of lining up for a potential reversal here from which we do. But when we come back the second time here for this double top, exact double top, that is the kind of pattern that we could get a reversal from. That was definitely something that could end up being a reversal point. But when we come back to it, the question is, are we going to bust through it or are we going to turn away? Now, because we've not seen the bearish divergence signal come in, we've not seen less kind of buying happening at that point, the chances are that we're going to kind of go up in order to make that kind of bearish divergence pattern. And will we actually back away at that double top, or will we form a triple top from which we reverse, or will we bust through it? And I say this, to get 3 price points exactly the same there is almost unheard of. It's a mythical thing. It's like the Loch Ness of patterns. A exact triple top does not exist, and the reason for it is that all the people that have played this double top at this point here have said this high, this price point is really important. I'm going to place my stop above that. All the pros can know that those stops are just sitting there, and so they'll try and run them, gun those stops, play them out, and you can use that to force people out of the market to make a little bit of money on the bust up trade. And that's exactly what happened. So as we're coming up to this previous exact top, it is not going to back away at that point. You know it's going to get run through by 1.5, 2 points, something like that, because that's where all of those stops are sitting there, sitting within a point and a half of those previous highs. And so that's good for a little bit of a bust up kind of trade. If you're into this after the break of this high, blue professional bar kind of down here, adjust your profit target accordingly to take advantage of that activity kind of going on, because you know those stops are sitting there. The pros know those stops are sitting there. They will try and bust those up. So an exact triple top where this high is the same as this high is the same as this high and the market reverses does not exist. Third time around, they're going to try and gun those stops because they know they're there. It's too easy a trade to take, and we'll bust up through there. And if you're looking at Friday's trade and trading that kind of bust up, you could see when those stops were hit, bang, that was like cascading up. It happened instantaneously for like a point and a quarter kind of move there, bang. I had a little trade into there. I only picked out 2 points out of that. It was good for 4, I think, because I was in at 88.75, and I think we got to 92.75. No, 92. So it was good for 3, but when I adjusted my target, I didn't get hit at the 3, so I just got out for 2. But it was good for a little kind of bust-up trade there. So just remember that as a little psychological pattern. The mythical triple top does not exist. They're going to run those, and we're going to put in a pattern like that. So that was the first one for the day. The second one was, we had a reversal. We 11 a.m. reversal window kind of comes along. Here's 11 a.m. We kind of started a reverse, and it was kind of looking good. Went into an exhaustion sell, blue professional bars coming at the lows, and we just bounced from there. And it was a classic. We've got a long weekend coming up. I think it's President's Day on Monday, so the markets are shut on Monday. Everybody's going to be looking at their charts. All the amateurs are going to be looking at their charts over the weekend thinking, wow, the market's making new highs. This is fantastic, blah, blah, blah. That is gamed up. The professionals want it up there. The people, managing the money want to encourage you to invest in the market, put your money to work in the market. They want strong closes, record highs, particularly on long weekends where people have time to kind of check things and do things. And so come Tuesday, they've got buy orders kind of rushing into the market because the market ended up so strong on a Friday. And that's what they'll want. They'll want to bust this thing up to nice closing highs in order to give everybody a good feeling over a long weekend rather than get them scared. So if we'd had a reversal day on Friday where this thing had declined and then kept on going down, whoops, people over a long weekend would be worried. They'd be thinking, well, market's down 1%, 1.5%. Maybe it's a good time to take profits on my, long trades or whatever. And so that's not kind of good. The professionals do not want that. The people who are managing money don't want that, so they can game this thing into the close to give us a nice kind of strong close. So that was it. It was a very nice ramp up into the end of the day, closing at record highs. Again, one of the reasons you kind of knew it was going to go through these highs because they needed that really kind of strong closing at the highs like that, and that's kind of the way the game is played, I think. So there we go, 2 nice little patterns. The mythical triple top that does not exact triple top that does not exist because the stops get run, and one of those feel-good ramps into a long weekend with a nice strong close that was kind of engineered by the people that need it. Anyway, hope you are enjoying your long weekend, and if you're a romantic and out there on Valentine's Day, I hope you enjoy yourself. Cage reverse gone long 88.75, long 88.75. Checking my stops and targets. I have to change that target, but let's just leave it for the time being. So we just did not want to break. Rambo and blue professional bar kind of stopped it. And blue professional bar come in here with a little sequence. We're just busting up through resistance here on 500. So we have not put in bearish divergence yet on 1500. So that's probably what we're going up to do. And what this high 90.75. Takes it time to kind of roll around. We will get a reversal. It's 9:51. I think we'll do it before the 11 a.m. window, but not quite yet. So let's just see where we get to, and I'll think about moving that target. Well, this is interesting. We're actually busting up to previous high 90.75, which is double top kind of up here, and through resistance again on 1500s. Weak with Rambo patterns, but they could be hunting more stops up there. Not put in bearish divergence quite yet, but yeah, if we hit that, we're going to run some stops. Like second time around, double top's okay, but triple top, no, that is not okay. That's we're going to bust through to a spike through there. So let's just see what happens. Well, did you just see that, ladies and gentlemen? Whoa! When that thing ran and we bust those stops, bingo! Up to 92. So exhaustion, that's kind of a bearish divergence. Got to be careful up here. Target's sitting at 92.75. I might not be greedy. We've got to go probably pull back into trend on that. Probably some blue professional bars to run, but I'm anxious to maybe jump out. That target to 91.75. Just looking for 3 on this move. No blue professional bars kind of come in here. We've got to make pull back end of trend on 500. Could easily go above 92, but that's spiky. This is second cyclical turn after dirty end of trend, so just come on, come back up. after we did that stop run. That was spectacular. No, just out 90.75, just for 2. That's a shame. 91.75 did get hit, didn't take me out, and I'm just a little bit wary and nervous up here because we finally put in the bearish divergence on 1500. So this is, pullback, dirty end of trend, and then the bearish divergence kind of comes in. When the exhaustion happens on the end of trend signal, kind of wait for the second cyclical turn. I know we busted past it. There's no blue professional up bars here, but this is pullback to end of trend, kind of going off. Bunch of blue amateur bars kind of up here after a little bit of exhaustion. So we've got a bearish divergence, and this kind of spike up is almost like, it's I don't know, it's almost like a bit of a complex correction kind of here. It wasn't pullback end of trend here, but it was close. So what are we, 10:10 a.m. Yeah, we're still within the window for a reversal, so I'll just kind of keep watching and see what happens next.